All right. Good morning. Good morning, everybody. Seen a error as I was loading everything, so if somebody will give me an audio check just to make sure I'm not talking to myself. Órale. Thank you. Thank you. Appreciate that. So we are exactly where we were yesterday, waiting on NVIDIA. Yay. I gotta say, just like last time, I got this sneaky suspicion they're gonna knock it out of the ballpark. They continue to expand globally, and they're looking backwards also at ways to boost older computers. They're literally trying to put their finger in every single pie that they can. And I have a horrible track record when it comes to earnings. So take everything I say with a grain of salt. But I don't know. I just got this sneaky suspicion they're going to do it again and have a really good earnings with a good forward earnings guidance, and that we're just going to keep on keeping on. We do have a lot of Fed speakers today, and we're going to get data out of Japan tonight. This is the biggest thing on the table. There really isn't anything at this point beyond NVIDIA. We're going to have no VFC. Neither one of those are really big. The new call wall at 5,400 on the SPX or 5,422 on the ES. It's just a hurry up and wait scenario at this point. I was talking with somebody yesterday, and they had a question about the move that we were getting in NVIDIA. Just kind of play this out for a moment, how it works. You know, the market makers are going to cover their bum, right? They're not going to take the other side of an options trade unless they hedge. By law, they have to take the trade, but they will protect their bum first. So when you take that back to something like NVIDIA, all the institutions are in there. They're not going to sit out, right? But at some point, you have to be concerned about earnings, and they're going to start to hedge. So look at it from the point of view as first the investor. You've got millions and millions and millions of dollars in NVIDIA, and you need to protect yourself. So you go in and you trade a bunch of options. To do that, the market makers are going to look at that, and they're going to cover their butt before they trade those options. This is exactly like the whole GameStop, Reddit, GME, Gamma squeeze sort of situation. If there's a run on options, the market makers have to buy stock. It's all about being delta neutral, right? So that forces a bunch of stock buying, and we get this move up in the market. The question was, could we read into that and, try to discern from the trading activity, is the earnings going to be good or bad? Was there some inside street knowledge that was giving somebody edge to know that NVIDIA would beat or not? The answer to that is no. Um, if there was ever any kind of leak that came out like that somebody knew in advance, it would just tarnish its name and reputation drastically. And that's why companies guard that information so closely. And every time that a scandal like that comes out, because of course people know, right? Don't fool yourself. People know. But if it ever comes out, then the whole thing just gets tarnished. And there's precedent in history. If you go back and look at companies that were caught leaking information or sharing information in advance and they got busted for it, it just wrecks everything. So, no, what we're seeing isn't some wink and a nod where somebody knew or knows in advance what's going to happen. It's just market makers covering their butt and institutions also covering their butt. Everybody's just hedging, hedging and hedging and hedging. And it's all about delta neutral positioning, which is weird because, most of us retailers, we just look at what we're holding. We don't look at our positive and negative position through, SPY beta weight portfolios. Although I've certainly taught enough of it, you could. Spot Gamma does a reasonably decent job of this through a tool called the Hiro, Hiro. It's real time up to the second trading activity. And one of their selling points, I guess is the phrase, is that the dealers will cover their bum before they cover a very large options trade. And so you can actually spot the stock volume coming in before the options volume comes in. And that's what their real-time Hiro tool is promoted to do, but it's not cheap. Not even a little cheap. This is Spot Gamma, and this is the Hiro signal that I was talking about. And we can look at something like NVDA, and then we can see the hedge wall. There's usually a dealer gamma level in here. And you can see how the institutions are, not the institutions, how the market makers are sitting. Are they positive delta, negative delta by X amount? And is it increasing or decreasing? So the whole thing with NVIDIA, nobody wants to get out in case it's a big blowout move. But on the other side, you still got to cover yourself in case, there's some negative repercussions. And we all know how it goes with earnings. Things could be really, really great. They could be announced in all the right things said, and it can still tank. And they could come out with the worst news ever and still rise. So don't think you've ever got your finger on the pulse of earnings, because the market just does irrational things. Nobody's ever promised that the market was a rational place. If you did want to look more into this, they do have videos on YouTube. You could just search for Spot Gamma Hiro. It's pronounced Hero. It's just misspelled. They really put a lot of time and effort into this tool, and it's not exactly the easiest thing to learn how to use, but it's an impressive tool. I usually don't try to show you guys crazy expensive stuff because and until you're consistently profitable, trying to justify the use of some of those tools, it's hard to chew on. One of these days, we'll just have to do a series where I point out all the most expensive, craziest stuff out there. On Thursday, we're going to get the 10-year tips auction. That's pretty good. It's not likely as big as NVIDIA, but still worth keeping an eye on. And that's a mid-afternoon one. We're going to get FOMC minutes tomorrow. It's just the minutes. So there will be some new data in there, or maybe some cementing of information, but we've probably heard from all these Fed speakers, because we're going to be I can't argue with that at all. The Bloomberg terminal, 25,000 a year, is the most expensive, but and it's also hard, very, very complicated, hard to use. But even things like Hammerstone or Hammersmith, that's an expensive $300 a month tool. Nowhere near as expensive as Bloomberg, for sure. The FOMC minutes, it's not FOMC itself, but it is going to give us some information and maybe pull back the curtain a little bit on who stands where in the voting members. Might shine a little bit of light on changes to the dot plot or something, but I don't expect too much shock and awe or something new out of the minutes. As you can see, the central pivot is moved up. That's the floor pivot. It's completely outside the zone of yesterday. Price opened underneath it. If we were to focus on where that could lead us, we could fade down into an S1 as support before rallying up into like an R2. But honestly, we have really no expectations of the market moving anywhere until NVIDIA tonight. That's not to say that we can't do like we did yesterday, break out and kind of stretch our legs a little bit. But by the end of the day, yesterday, we were right back where we were, right? There was no real change. With all these Fed speakers today, 7 of them that I know of, I think. Who knows what we could get beyond those 7. We could see some gyrations, a little bit of movement. Remember, any of them can screw up and say something and be taken out of context. I mean, there's so many things that can move us today. But it's still the base case argument that we're going to hold the line. Usually a day like this works out really good for iron condors, you know, a 0-day iron condor, 1 in the morning and then 1 in the afternoon. The problem with that is they'll do these kind of shenanigans to scare the heck out of you, you know, and then you end up ejecting out of the trade. And if you'd have just held on, you were okay. So, you know, not going to be just a simple walk in the park, but either way, you're going to want to be out of those before the end of the day, because when NVIDIA does hit, this is very likely going to move everything. Volume is really light, but we're not seeing any hedging in the ES this morning. It kind of makes sense. Some Bitcoin news came in yesterday, which moved to Bitcoin. And at the very least, that might be something that we can play. So remember, the indexes are going to be in this kind of pause, hurry up and wait mode. But there's always something. Uranium, hot stocks, China ADRs, Bitcoin stocks. There's always something that we can play. So if you can't trade, you know, the equities, then focus on the indexes. If you can't play the indexes, then focus on the equities. For the futures traders, if the ES and the NASDAQ are going to just sit sideways, look at gold or oil, and always trade something. The point of control moved down a little bit. We're going to be expecting it to move up into this 53.32 cog line. We are sitting on a cog line. The TPO in blue is representing the same thing as the volume. We've been here for a while. We're just slowly building it up. It's very likely this will be the point of control, which will put us in a position where it won't necessarily be a classic P, because we'll still have this lower volume down here, but the point of control will be here. And in that classic P, the point of control will be in the upper portion. That puts us in an odd spot, because if we tend to fade off from that level, it'll be a significant resistance to get through to go up from there. But if we break out of the top of that P, then we'll be leaving behind that point of control as structure. But it's not a classic P anyways, just because of all of this lower volume that still has to fade out through the week this week. Unless we break back down below 5,300, we're going to lose all of this volume, and it will look more like that next week. Then as we get through next week, it'll tighten up even more. That's assuming we just stay in this zone, which thanks to NVIDIA, I don't think we're going to stay in this zone. The really good thing is it's an either or at this point. We will break this range. That's guaranteed. Like the old bar song, don't care where you go, you just can't stay here. It's going to get out of the box. We can just measure the levels in both directions, see which way it breaks out, and we'll be trading that likely into the rest of the week. We still have the new VPOC that we laid on from Friday. We don't need one from yesterday, because you could see if we were to try to put a VPOC line on here, they're overlapping, and it would just, it's already been hit multiple times. So there is no VPOC. Having said that, this is our current point of control is exactly where the point of control was yesterday. There's a lot of different phrases for this, but this is the market's balance point right here. And that's all we're doing is just waiting on the video, just sitting there chopping through the middle of all of that. They say that FOMC and big events like this, NVIDIA, is volatility suppressing. And this is a beautiful classic example of that, because so far we haven't done anything, and we are IX10 in a relatively tight range. Just keep in mind that we're going to begin expanding a little bit at a time, like a megaphone pattern, more and more until something finally breaks. But this is the zone from last Thursday's high to even yesterday's high. It's the same spot. Friday's low. That's the zone that we're going to be focused on when we get out of this. And it's not perfect, but you can see that we're just almost equidistant to each side of the weekly range. This is giving the moving averages time to catch up with us. So we are closer to the 10 now. This is the 10-day. We're less than 1% away from it. It's like correcting through time rather than correcting through price. So it's a nice healing situation after this move that we've had. I mean, since QRA back here, it's been a pretty good move. It got us back up to the highs. We need to digest that a little bit. It's healthy. So for a number of reasons, this move back up is just a bit much, and digesting it is fantastic. Because if we leg up from here after having digested, rather than just, running all the way up and then breaking out and then expecting to get to 56 by the end of the year, that's a tough nut to crack. But running up and then pausing here and digesting and then legging up to 56 by the end of the year, oh, I can definitely get behind that. That dog can hunt. So I like it as long as NVIDIA doesn't tank the markets. And of course, there's always, there's election year shenanigans. There's, new elections going on now in the Middle East for a different president over there from the one that died in a helicopter crash. There's a lot of things going on around the world that can screw things up, but all else being equal, I like the leg up from here. And I like this digestion, this pause that we've had. We are getting a 2050 cross on the daily too. That's kind of an old school signal, but there's still a lot of old school analysts around and old school traders too. For the 10 week, same thing applies. We're sitting still, so the 10 week is getting closer to us. we're still 2.4% away from the 10-week. It's not necessarily a bad thing. I don't think we'll make it back to zero unless, of course, NVIDIA drops us on our head. If you look at the 5-day change, which is these tags in the upper left corner of these charts, the last time we looked at this, most of these things were up by over 3%. Now, most of them are under 1%. Consumer discretionary is actually under the 50 and is in the red. I was making an adjustment to my watch list, not the list that we look at every day. That's something completely different, but just I put out options levels every day on a few things. And I don't know how much you pay attention to financial names, but take a look at something like JP Morgan or Wells Fargo. These runs that we've had this year, you know, starting in 2024, it's just been pretty amazing, really. American Express, Wells Fargo, JP Morgan. Some of these names have just been quietly climbing and climbing and climbing and climbing. But if you're watching something like KWeb China ADRs, someone was asking about Wyckoff the other day, and this whole China ADR situation is a perfect example of Wyckoff. We're all looking for it to come out of this distribution and start working its way back up. Pot stocks. And, you know, I think the writing is on the wall with pot stocks. Pot will become legal more and more and more. And it's going to take time, but this is climbing out of the hole. So there's spaces we could play. There's always something that we can do. I would say if you're already up on the week, kick back and let NVIDIA do its thing. Maybe dabble around in something. You know, look at the intraday scanners. What's hopping? Crude's moving decently. Like we could be getting some breakouts in gold. There's always something, right? That's the idea. So we have a much narrower ADR level. You know, when we look at the ES, it's usually seems much wider than this. We're on gold here. We've got kind of a narrow CPR band, which implies that we could break out and move. We've got gold on the weekly chart here, right up against that 2450 and trying to test a big breakout. It's a nice scoop pattern. China's down. GDX gold miners is down. Bitcoin is up. Semiconductor triple X is up. Uranium, you know, uranium faded back under 50, but it's close to being up enough. And pot stocks are trying to move around a little bit. So there's some 0-day plays maybe on the S&P. I don't know that I'd necessarily want to do an iron condor or a 0-day on IWM per se. I think small caps could get a move. So I wouldn't try it there. And we seen yesterday that massive divergence between the S&P and the NASDAQ. I don't think that I would try to do a 0-day on the NASDAQ either. But if you got the time, it wouldn't hurt to price out some lottery tickets for later in the year on the S&P, whether you use the SPX, SPY, XSP. The XSP is a micro SPX. So it's got European style options. It's cash settled. So you can trade it a little different than you can SPY, but it's priced like SPY rather than being priced like the SPX. It's not as liquid, but nothing's as liquid. Yeah, they're already starting to slowly build out at that 6,000. I would find something to do on small caps, IWM, hot stocks, Bitcoin, gold, or oil, and maybe leave the indexes alone other than, a morning iron condor or an afternoon iron condor, wait for NVDA, and we'll see how it goes from there. There's really nothing to hit on today. It's boring when this happens, but it does happen. One of the more important things, though, is being able to spot it. So I know a couple of people asked me yesterday, what's going on? How come the market's not moving? What's this? What are we waiting on? You'd have to pick up on this kind of stuff so that you don't try some tactics that you wouldn't normally try because you got the idea that we're not supposed to go anywhere. We're not supposed to do anything. We're waiting on a sideways market. That's why, price will straight up lie to you, and you have to play the bias rather than play what price is telling you, like that reversal yesterday. It looked like we were going to break out and continue to go higher, but the bias was we weren't supposed to break out and go higher. So, having the bias at least brings a little bit of caution in when we see what looks like a breakout, telling us to, look for the other side. Same thing today. And that's it. Short, sweet, simple. It's been a while since we've had a 30-minute morning briefing. Everybody be careful. Be safe.